When people talk about investing in Portugal, they usually talk about opportunity. They talk about lifestyle, stability, sunlight. They talk about how safe it feels, how welcoming it is, how different it seems from faster, harsher markets. For many foreign buyers, Portugal represents something more than a country. It represents relief. Relief from volatility. Relief from pressure. Relief from markets that feel aggressive and unforgiving. Portugal looks easy. It feels safe. It feels welcoming. It feels slower, in a good way. And that's exactly why so many foreign buyers are drawn to it. Good weather, political stability, affordable property, at least compared to where they're coming from. On the surface, it feels like a shortcut, a calmer way to invest, a softer version of the same game. But real estate is never about how something feels. It's about how it behaves. And this is where many foreign buyers misunderstand Portugal. Not because Portugal is misleading, but because they arrive with rules that were shaped somewhere else. In many countries, time is compressed. Deals move fast. Decisions are immediate. Exits are expected. Portugal operates on a different rhythm. Transactions take longer. Processes are slower. Outcomes unfold quietly. This isn't inefficiency. It's structure. Foreign buyers often underestimate holding time, not because they're careless, but because they've never had to wait this long before. And in real estate, misjudging time is never neutral. It adds pressure. Data matters everywhere. But culture decides how data is used. Foreign buyers rely on listings, numbers, yields. Local markets rely on relationships, familiarity, and informal trust. Some opportunities never appear online. Some risks never show up in spreadsheets. One of the most common assumptions is simple. If I can buy, I can sell. But liquidity is not evenly distributed. In Portugal, liquidity depends on location, buyer profile, timing, and sentiment. Some properties are liquid only in good conditions. Some are liquid only to locals. Some look liquid until they're not. Foreign buyers often confuse market access with market depth. Portugal feels safe. That feeling lowers defenses. Buyers accept thinner margins. They stretch assumptions. They rely on appreciation they don't control. Safety becomes emotional, not structural. And emotional safety is dangerous in real estate, because when things slow down, and they always do, the room for error is already gone. Foreign buyers don't miss opportunities. They miss alignment. Alignment between expectations and reality timelines, and patience, flexibility, and pressure. Portugal doesn't punish investors, but it quietly exposes those who brought the wrong rules with them. Portugal isn't just a property story. It's an economy story. Tourism and real estate have been two of the biggest drivers of growth. And foreign demand is real. Americans have become the top nationality among foreign buyers of Portuguese property. That sounds like a positive signal, but it creates a second effect most foreign buyers don't think about. When demand rises faster than local wages, housing stops being just an investment. It becomes a political issue. And political pressure changes rules. Portugal has already shown it's willing to change programs when housing becomes a national problem. So the risk for foreign buyers isn't always the building, or the tenant, or the interest rate. Sometimes the risk is that the country adjusts the system to protect locals. There's also another quiet factor. Portugal has strong ties to the EU, and it's generally open to investment. But it can still face political uncertainty, and the government can become fragile when budgets and reforms are hard to pass. So the real lesson is simple. If you invest in Portugal like it's only a lifestyle market, you'll miss the forces underneath it. Tourism, foreign demand, affordability pressure, and politics all shape what happens next. So remember this. Investing abroad isn't about finding the right country. It's about understanding how the system behaves when you're not from it. Portugal rewards patience. It rewards familiarity. It rewards those who respect its pace. Miss that, and even a safe market becomes uncomfortable.